Ladies and gentlemen, another day. Casper here, Uselink, the 10th of October 2023, and we're going to look into the Twitter space, the Twitter recap. I haven't done this in like a week, so I have some pretty old charts, but still very valid and fun to look at. So let's dive straight into business here, starting from the earliest post that we have. Um, First of all, thank you for all the comments regarding yesterday's videos where I asked if the pace was too quick or too slow. Many people have responded to it. Thank you very, very much for that feedback. Thank you. Let's start here with Alex. Move, Merrill Lynch option volatility, estimated bond market volatility. That was very difficult to say, but you can see here that basically the volatility of the bond market is breaking out here again. I don't know, this is 7 days old, so a lot of things could have happened, but this is probably a precursor to what could become very unstable in the bond market. Let's see. Grady, the uranium miners did 600 on average during the baby bull, from 2020 to 2021. Hitting the big resistance last week was more than obvious. You see, we came into the top here again, Uranium. Having caught all the major lows and highs at the service for uranium since the March 2020 lows. Just going to show you that in order to be on the correct side, you need technical analysis. And I agree, you don't need to be a pure mastermind genius. No one is, but one or two trend lines or one or two rules with a long-term moving average can really save you from a lot of pain. And you don't need to make it more complicated than it already is. So keep it very simple. 1, 2 trend lines. That's it. That's basically all you need if you want to keep it very simple. CEO technician here. Oh, what do we need? 16% correction in like a week. Is that it, or is the more downside ahead for CCJ in the uranium sector? It's very hard to predict, but I am in the camp that we might see one last C wave lower on the shorter time frame for uranium miners. I don't think this pullback is it, but then again, we are seeing some buying here, but again, also some topping patterns on the URA. Anyways, that's not what we're going to talk about. He's talking about, the 16% correction. Is that it? Looking back, you can see every time we came into the 50 moving average, we are getting bought up, basically. The difference, I will say, this time around is the angle of the sell-off here coming down. Very big red daily candles. Finding support here, obviously, at this cluster makes sense, but I don't think this is the bottom here. I do think that we could go in for one more wave to the downside, and then we should also be a bit lower on the URA, obviously. But let's see. I don't know exactly where CCJ is now, and this is roughly 6 days old, so a lot of things can happen from there on. John here with XLE. Great take, actually. XLE, it's hard to look at the energy sector and not see the giant inverted head and shoulders pattern. Seasonality confirming that October is a lousy performance over the past decade or so. Great take by him, XLE, this is a major run-up from the 2020 lows. And we could be carving out the right shoulder here of this big pattern. So yeah, great take, obviously. And I do think that energy is the place to be for this decade. I think energy has a lot more room to go. Obviously, it doesn't go in a straight line, but I like this take, a different angle on it. But again, one rule to follow with regarding to head and shoulders is that in this case, the neckline cannot go down. That's one thing that I've noted, is that if you have a neckline going down, that's very often not a clear head and shoulders pattern. So if you have a topping pattern, you want it to angle up a bit or horizontally. That's your view. Having it going down, as a rule of thumb, is not a head and shoulders per se, because you cannot have the right shoulder pit there lower than the left shoulder. That's my opinion on a head and shoulders pattern. Anyways, Rashad here, senior gold miners GDX at roughly $26 is trading at a 3-year support trend line, which was tested multiple times, broken down once in August, but regained it back, late 2022. You can see here a very well-defined channel actually with a breakdown here, and we are again over here. I just want to point out, such a clean trend line here is basically all you need, and then you can maybe find a trend line at the top just to keep you on the right side. Again, clean chart, one trend line, and two in this case, obviously the parallel, but still, it's a great find to have this internal trend line right there. I like it very, very much actually. Hedgehog, a good friend of mine that I'm starting to write and talk to quite a bit. So gold versus US markets, in this case, the SPY on the monthly, again, coming down, down, down. Momentum is starting to lose steam to the downside, meaning we are not going down as aggressively. He has a beautiful blue trend line here, and I think if we can crack getting above this high here at roughly 0.44 and his 50-month moving average right there, the blue one, then I think, we have carved in at least a short-term bottom here. Also, the MACD is coiling at the 0 line, which is, if we break to the upside, you should have momentum shown at the MACD chart. Again, I'm not a master in MACD, so please don't ask any questions about that in too much detail. Again, bar chart here, McDonald's, death cross is upon us. Share prices continues to collapse since the falling through the 200 moving average and is headed for its lowest close since October 2022. What I want to show with this chart here, yes, we have a clear death cross between the 50 and the 200. In most cases, it is a bad thing. Short-term momentum is bigger than the long-term momentum to the downside in this case. But also look at how stretched we are. So going short here, given how stretched you are, is no way a winning strategy. You can just see we have been selling off for the past 1 month or so, down, 10%, 15%. So going short here doesn't make any sense at all, given the distance to the death cross. So again, you cannot trade the death cross purely. How I would play this is that I have noted the death cross, and then I would look for a retrace into those moving averages, and then I would buy or go short on the next leg down again. Shorting here is not how you do it, in my opinion. Even though you have a death cross, it doesn't really matter given you are so distant from it. So just want to show you, but clearly McDonald's has been slain for the past 2-3 months or so. Jay Hinster here again, major breakout. We have been looking at this breakout as well on the channel a lot, coming all the way down to that trend line here, or trend zone, and we are having a bounce here again. Again, this is often, very, very often, I would say 8 out of 10 times, if you get a full retrace into that major breakout trend line, that's where you buy. You have very good probabilities of that being the low in this region after a breakout of such a formation right here. You break out, you retest, and then you go higher again. I don't want to go with that. Let's go Jay Hinster again here, the CCJ, 2-month, the destination. So this is a very, very long-term, 25, 30-year long pattern. And you can see here from his point of view, a bull flag in the making. I have it quietly set up quite differently, but the thoughts is the same. And this is the run up here, 2020 March lows, and then boom, all the way up here. And basically what he's trying to say is that we could go all the way up to the upper trend line here of that parallel channel. I do agree. I don't quite agree with where he put the channel, but anyways, it doesn't really matter. His thoughts are quite similar to mine with regarding to CCJ. I think the first stop will be the all-time high at roughly 60, or what is it, 55, give or take. And then we will probably have a resting period before we go higher into fresh air. Again, that's my bullish opinion on uranium, or in this case, CCJ. Denison Mines here, log scale, 3 years bullish pennant formation breakout. Shown plenty of time on the channel here when we're looking at the miners. Major flagpole into a pennant, and you have a move here again. Same move. If it happens, you're going to $10. I agree. That is an absolute beauty of a target, and yeah, if that happens, I know many people are very happy. I do agree that that this one is going to rip in the coming years. That's at least how the charts are looking right now. It looks fantastic. And I still see many people in disbelief, even though we have broken out here and ran like 40%, it is a lot on URA. Don't get me wrong, but still, people still don't believe that you can run even further like you did back in from March 2020 into 2021. I'm in the camp that we are going way higher, obviously, as you know. There it is. Good old Tavi Costa here, insane. Whoop. The current Nasdaq to Treasury ratio stands at 70% higher than its levels during the tech bubble's peak. You can see it over there. This chart puts into perspective how, despite ongoing issues with the treasuries, the more relevant question now is whether overall equities can remain as overvalued as they are in today's interest rate environment. It's not a technical chart, I know, but just to show you how the Nasdaq, how great of a performer it has been ever since the GFC, the global financial crisis low. Like it's almost like a 10x, 8x here. Yeah, it's a 10x versus bonds or treasuries. J Hinster, Euro on the monthly, huge support. Again, you can see the pivot low there. Again, retesting there, here as well. And then we came for a test here. Obviously, breakdown, snap back up again here in 2022. Retest, and you can see here for the past, let's call it 10 weeks, we have had red weekly candles in the euro dollar on the euro. And again, how oversold can a chart? Everyone is bearish right now on the euro, and I do believe that we are going to see a bounce here. How high? I don't exactly agree with the angle here, but I do expect a bounce here. How high can we go? We will have to wait and see. But we have some PPI numbers coming out tomorrow. Very important data. Also Tuesday and Friday, I think we have very important data. It's a big week with regarding to data, so it could be very decisive here. Erlovsky here, monthly cycles is bigger than the weekly cycles, is more important than the daily cycles. Also something that I'm trying to tell, that when you have the monthly and the weekly cycles that are in control, meaning they are in a very big bull market, what happens on the daily doesn't matter at all. So if you start to see, a counter trend move on the daily versus the monthly, you are going to buy into that counter trend move on the daily because that is just a normal pullback. The monthly is clearly in a major uptrend, and yeah, then you're buying the daily chart pullback. Not if you have one red day, you go long, right? But if you have a major big setup, over like 2 weeks, 3 weeks on the daily chart, that's your entry. J Fung here, US, the 10-year double top here, coming all the way up. This is a rising wedge, as you know, coming all the way up here, double top, and now we're coming back into that wedge. Also something that I've been trying to show a lot, if you get that false, because usually you expect it to break down. So if it breaks to the upside and comes crashing down again, you look out below because you are going very often to visit the lowest point of that angle, or of that triangle, which is here at around, I can't see the exact number. Let's see, at roughly 4%, a tad above 4%. So yes, again, PPI is coming out tomorrow. Rates are tanking quite a bit. Let's see where we end up. Simon here. When you follow us, silver big picture view on the monthly chart. Yes, completely agree. Monthly chart looks fantastic. Major flagpole, flag there, breakout, retesting here, the bull channel made into demand. You can see it here, and he has a target of 28, then 40, and yeah, that is what it is. Last but not least here, Burak. Palladium touched a major support and bounced. It should start a rally, major rally from here. What Burak is really good at is these long-term hidden parallel channels here, and you can see here it touched right here at roughly 1150. Also a target that I have had, 1150 is a very big, important level to look for. And again, just look how oversold we are. I mean, can it go down further? Of course it can, but again, you have to also be realistic that you are, even though we are to go lower at some point in time, we are due for a bounce here, big time. That's also my take on Palladium. Everyone is bearish. I would assume the shorts are stacking up, and I think Palladium here is ready for a ripper. That's all I had for this one here. Thank you for staying till the end. Have a great day, guys, and we will see you in the next one. Cheers.